October 2025. Restaurant sales trends. Sunbelt dominance continues. Each month, we Sell Restaurants reviews national activity to understand buyer behavior and transaction patterns. October continued the same strong trends seen throughout 2025. Sunbelt markets led activity. Buyers focused on manageable concepts with clear operating models, and well-prepared listings moved quickly from inquiry to closing. These patterns reflect broader shifts in where buyers are searching, what they want to operate, and how fast they act when a listing aligns with their goals. With more than 1,300 restaurants and over $558 million in listing inventory, our dataset provides unmatched visibility into buyer preferences across the country. This scale eliminates the fluctuations seen in smaller samples and ensures that the trends we report are based on real activity and completed sales. How we analyze the market. This report draws from 4 datasets focused on the top 25 listings and all completed sales. New buyer inquiries, confidentiality agreements, Google Analytics traffic, and closed transactions. Together, these metrics create a complete view of the buyer journey from initial interest through closing. Where buyers focused in October, inquiries concentrated heavily in Florida, Texas, and Georgia, which together represented more than 2/3 of the most active listings. Cafes, bakeries, and coffee shops saw the strongest demand. Buyers favored these models for their shorter hours, smaller teams, and predictable operations. Many run 6 to 8 hours per day and offer reliable returns with fewer moving parts. Breakfast and lunch concepts continued to attract interest. These daytime operations offer streamlined menus, consistent staffing requirements, and strong morning and lunch traffic without the complexity of evening service. Turnkey second-generation spaces also performed well. Fully equipped locations with hoods, grease traps, and complete build-outs appealed to buyers who want to launch quickly or avoid construction delays. Many can open within 30 to 60 days of closing. Franchise opportunities drew strong attention from buyers seeking brand recognition and proven systems. Transfers require additional steps, but operators value the support, training, and established processes that come with franchised models. Across all categories, the strongest listings shared 3 qualities: pricing aligned with current multiples, clear value propositions supported by financial summaries, and strong locations with favorable leases, mid-funnel activity, and CA signings. Confidentiality agreements confirmed buyer seriousness. Florida accounted for 32% of top CA activity, followed by North Carolina at 24% and Texas at 20%. High-earning Central Florida restaurants, Charlotte cafes, Arizona turnkey spaces, and strong North Texas locations remain top performers throughout the month. Buyer validation through search data. Google Analytics reflected the same geographic trend. The most viewed listings came from Texas, Florida, and North Carolina. 7 listings ranked highly across inquiries, CAs, and Google views, signaling correct pricing, effective positioning, and strong demand. These listings often receive multiple offers and close at or above asking price. Closings in October and the SBA shutdown impact. The government shutdown from October 2nd through November 12th paused all SBA lending activity. Even fully approved loans could not close during the shutdown, creating a backlog that will extend into early 2026. Deals that typically close in late October or November shifted into December and January and compressed the usual year-end transaction window. The shutdown contributed to a lower median selling price of $140,000 in October. Not because valuations dropped, but because higher value finance transactions were temporarily absent from the closing pool. Smaller cash deals continued to close. October transaction metrics included a median of 126 days on market. 60% of sales closed within 180 days and 33% closed within 90 days. 3 listings closed in under 60 days. All second-generation asset sales priced under $120,000. Independent restaurants sold in a median of 101 days, compared to 168 days for franchise resales. Independent transfers move faster due to simpler structures. Franchise resales involve additional disclosures, approvals, and training requirements that extend the timeline even in strong markets. How WSR performed against national benchmarks. BizBuySell benchmarks for all business types showed 205 days in the first quarter of 2025, 204 days in the second quarter, and 172 days in the third quarter. We Sell Restaurants outperformed the latest national average by 46 days, selling inventory about 30% faster. Restaurant-focused brokerage, combined with well-prepared listings, continues to drive this performance advantage. Why Sunbelt markets continue to lead. Florida captured 35% of October closings, followed by strong performance in Texas, Georgia, the Carolinas, Arizona, and Colorado. The Sunbelt remains the strongest engine of U.S. economic growth heading into 2026. Population growth remains a major factor. Florida, Texas, North Carolina, South Carolina, and Arizona continue to add residents seeking affordability and business-friendly environments. These households bring higher incomes and stronger restaurant spending habits. Federal investment tied to semiconductor, electric vehicle, and battery manufacturing is also creating high-wage employment in states like Arizona, Georgia, and Texas. These jobs support frequent dining across all segments. Tourism and professional migration round out the picture. Florida and Arizona continue to draw significant tourist traffic. Cities like Charlotte, Raleigh, Austin, and Nashville attract young professionals relocating from higher-cost areas. These markets create strong buyer pools and support competitive valuations. These fundamentals explain why the strongest performing concepts in October were concentrated in the Sunbelt. Listings in these markets often receive inquiries within days, move to confidentiality agreements within weeks, and close within 4 to 5 months when priced and presented correctly. Slower growth regions in the Rust Belt and Northeast continue to experience smaller buyer pools and longer timelines. These markets remain viable for operators but require more patience during the resale process. Key takeaways for sellers. Sunbelt markets produce the deepest buyer pools and the strongest economic support for restaurant valuations. Turnkey spaces, breakfast and lunch concepts, dessert shops, and cafes remain top performers. Listings with six-figure earnings or premium locations generate multiple offers. Strategic pricing, professional presentation, and complete documentation remain critical to fast and successful closings. Key takeaways for franchisors. Multi-unit resales remain strong in high-growth markets. Buyers prioritize clear financials, brand stability, and streamlined transfer processes. Franchisors who provide transparent resale frameworks and responsive approval procedures see faster closings and stronger buyer confidence. Markets with established brand performance and clear operational support create ideal conditions for successful transfers. We Sell Restaurants will continue to track buyer behavior and close transactions as we look ahead to 2026. The data confirms that preparation, positioning, and strategic market selection remain the strongest differentiators between listings that linger and those that close quickly at strong valuations. Ready to sell your restaurant? Visit this link for information. Browse over 1,300 restaurants for sale on our listings page.